Michael Cochran with BentOak Capital, here to provide our November 2022 market update. This month, we'll look at recent political, market, and economic events that have made for a busy November. Please remember to stay tuned at the end of this video for a required disclosure statement. While it may not be easy to consider the October market reaction temporary, there are some potentially sustainable developments that may continue to provide a slight tailwind to the markets. Investors have begun to look beyond current inflation pressures and the Federal Reserve monetary policy tightening cycle toward potentially better conditions in 2023. The Fed may have been slow to attack inflation, but its policies are working. Some recent softening in economic data, coupled with signals from the bond market, may be indicating that the Fed's policymakers' concerted inflation fight may be closer to the end than the beginning. The October Consumer Price Index reading reported this month rose less than forecasted, pushing the annual rates down considerably from the previous month. Shelter costs, or rents, rose in October and contributed to over half the rise in total inflation, while other components were not as high. With this lower than expected inflation report, a market that has been thirsting for good news saw the biggest one-day gain in the S&P 500 since April 2020, and the NASDAQ Composite's third best performance since October 2008 after this report. The week following the CPI announcement, the Producer Price Index, or PPI, which tracks suppliers' pricing, came in below expectations as well. Headline inflation is likely past its peak, but the Fed still has work to do. The easing inflation measures give the Fed some leeway as it begins to potentially downshift from the recent aggressive pace of rate hikes. Other important news this month was the midterm elections. Assuming Republicans take the House, we believe it would be a market-friendly outcome no matter what happens in the Senate. Markets don't react well to uncertainty, so political gridlock is normally a favorable outcome. Looking ahead, markets have historically done well in the year after midterms. In fact, they have been higher 18 out of 18 times in the following year, dating back to 1950, with nearly identical returns under Democratic and Republican presidents. As we look ahead, the months of November and December have historically been constructive for asset prices. We will continue to monitor corporate earnings growth and economic uncertainty as we wrap up what has been a volatile year. It's important to remember that the market is always forward-looking and asset prices tend to reflect what may happen months or quarters ahead. If investors continue to look ahead to better inflation readings and an eventual end to the Fed's rate hikes, asset prices may begin to more regularly reflect some budding optimism. We continue to reiterate sticking with your comprehensive plan in a year like this. If you'd like to revisit your financial plan or know someone that might benefit from our services, please don't hesitate to contact your advisor. That wraps up this month's video, but please visit the Resources tab on our website for several new blog posts that you might find helpful as we approach year-end.